Hello and welcome everyone to the week ahead commodity report, where we of course will be reviewing the markets for the week ahead. Commodities, they've certainly made an explosive start to 2022, notching up double-digit gains already within the first 3 weeks of this year. The sector-wide supercycle continues to gather momentum. Last week, aluminium, copper, lithium prices, they took center stage, skyrocketing to multi-year highs. Meanwhile, nickel prices, they surged to a decade high. Crude oil soared to $86 a barrel, which notched up 15% gain so far this year. The bullish momentum also spilled over into precious metals. Gold prices, they rallied above 1,847 US dollars per ounce to hit 2-month highs. Meanwhile, silver prices, they touched $24.60 per ounce, posting their best weekly performance since May of 2021. However, the real star performers amongst the precious metals, they were platinum and palladium, which have both been on an incredible run this month, rallying up to almost 14% in the last week. Now we're beginning to see why that long list of Wall Street banks, from Goldman Sachs to JP Morgan to Bank of America, have described commodities as their preferred asset class over the next decade. Last week, Morgan Stanley and BlackRock, they also joined the list with their predictions that commodities will be the best performing asset class of 2022. There are plenty of reasons why the world's most powerful financial institutions are extremely bullish on commodities. These include rapidly surging global inflation, tightening supply versus soaring demand, logistical bottlenecks to ever-growing supply chain issues, all combined with a very disruptive economic recovery from the pandemic that shows no signs of fading anytime soon. And let's not forget the switch towards a greener world, which is fueling fierce demand for commodities such as aluminium, copper, cobalt, nickel, lithium, uranium, as economies race to decarbonize the world by 2030. Looking back, it's no secret that commodities were the best performing asset class of 2021, with everything from the metals to the energies to agriculture racking up double to triple digit gains. The traders that saw the opportunity and took action, they accumulated life-changing wealth. In fact, the majority of our clients at the Gold and Silver Club made between 6 to 7 figures in 2021. Here are just some of the testimonials which have been flooding in from our clients, sharing their successes and achievements. Last week, in fact, with our clients at the Gold and Silver Club, we banked 5 positions on platinum for over 4,000 points profit. So of course, for every 1 lot contract that you will be trading, that's $40,000 of profit. For every 10 lot contract that you will be trading, that's $400,000 of profit. Now, as we head into 2022, that trend is definitely set to continue, with commodities transitioning through their super cycle as they enter the next exponential phase. The previous 2 super cycles, they took place in the 1970s and the 2000s. In both cases, the commodity sector resembled the identical telltale signs as it's displaying again right now. If history is anything to go by, then that stage is almost certainly set again for commodity prices to skyrocket and reach new all-time highs in the months ahead. All in all, the evidence is mounting that a new commodity supercycle is underway, and it goes without saying that commodities, they are definitely one of the hottest and most exciting asset classes to watch in 2022. Looking ahead, the major market movie events that traders will not want to miss out on, they include the Federal Reserve's monetary policy meeting. Traders will be anticipating a more hawkish tone from the Fed, with the expectation that policymakers will signal their first interest rate hike as early as March. Currently, traders, they're pricing in 4 interest rate hikes in 2022, whilst JP Morgan and Goldman Sachs, they expect central banks may take a much bolder stance by raising rates 6 to 7 times in 2022. Also on the radar next week will be the closely watched US GDP data, as well as the Fed's preferred measure of inflation, PCE inflation data, which always has the potential to move the market significantly. So with that, let's move over to the charts and we'll talk you through exactly what we're looking at here as we head into next week. Firstly, moving over to palladium, which surged over 15% in the last week, you can see we've now broken out to 2,100 US dollars per ounce. In fact, we highlighted this and forecast this at the end of December with reports we put out on the 21st of December when palladium prices were trading around 1,750 US dollars per ounce, that our expectation as we move into Q1 of 2022 was that palladium prices would break out over 2,500 points to the upside, so a 250 point move, taking the price back above $2,000 per ounce. We've seen exactly that just within the first 3 weeks of 2022. Impulse move here over Wednesday, Thursday and Friday, taking the price again back towards 2,150 US dollars per ounce. Then moving over to platinum. Platinum, we've also managed to bank a windfall amount of profit on this market in the last week. We currently have positions that are open which are up over 5,000 points on this market, and we banked 4,000 points last week. Again, for every 1 lot contract that you'll be trading, that's $40,000 of profit. For every 10 lot contract that you'll be trading, that's $400,000 of profit. Very much like palladium, we also saw an impulse move to the upside last week over Wednesday, Thursday and into Friday, taking the price out to 2-month highs. That was also the same with gold as well, breaking out to 1,847 US dollars per ounce. Silver also hit our previous forecast target last week as well, which was at $24.50 per ounce, and platinum did the same with our target at 1,050 US dollars per ounce being met. Again, feel free to go back to our reports last week where we highlighted to you our targets for the year ahead, and we've now hit those targets not only on platinum and silver and palladium but also on crude oil as well, breaking above 80 US dollars per barrel. Crude oil prices, they're now up 15% in 2022, so we're absolutely transitioning into this super cycle. You definitely do not want to be missing out here. Oil prices breaking above 7-year highs last week. We're now right at the neckline again, trading just under 85 US dollars per barrel, and this also has the potential to skyrocket as we continue to transition between now and through to February as well, which tends to be a very strong month again for energy prices. Now moving over to the metals again here, we'll just clarify in a bit more detail expectations as we go into next week. So firstly, moving over to gold here, I would certainly look out for the potential for a revisit back towards the 2-month highs again as we go into next week. We've had the highest weekly close here in over 2 months here on gold, so I would be looking for another revisit back towards that 1847, 1850 zone over the next week, and taking us really back towards the swing highs here from November. Bear in mind as well, we have the FOMC statement going into next week. There's a very specific cycle to capitalize on with the metals as we go into an FOMC statement, and after that as well. What I will put on your radar is the week after the FOMC statement, we're going to have China on their 1-week public holidays. That creates thinner liquidity in the first week of February. Essentially, you're not going to see metals get much of a bid during the Asia Pacific session over that week, and it can create pullbacks. So if you are looking for opportunities to get better prices on the metals, likely you do not want to be FOMOing in at the moment. We've been buying into the metals here at much lower prices over December and the beginning of January, and really our main job right now is to be banking into strength and coming out of a windfall amount of profit before major news items such as the FOMC statement going into next week, and then of course trading that volatility as well. It's also similar here on silver too. So silver has broken out to 2-month highs. It's hit the levels that we expected here for silver. Again, you may well see another reattempt to break above the swing highs and 2-month highs in the lead up to the FOMC statement next week, but then just be wary. The week after that, you could see a further pullback as we go into the Chinese New Year. This would also be relevant for platinum too, which on higher time frames has had a huge breakout, 10% move to the upside in the last week here, very much like palladium as well, which had an impulse move last week, moving 15% to the upside. So where we're at with platinum at the moment, again, I wouldn't be surprised to see another reattempt to break back out towards the 2-month highs here, but I would watch out for potentially selling pressure around or after the FOMC statement as we go into next week. Also keep an eye on the dollar index here as well. So we bought into the dollar on the previous dip that we saw right at the beginning of January. We banked into strength last week. Where we're at right now with resistance around the 95.81 level, if we were to roll over and pull back. This is what would likely further assist the metals into the beginning of next week in the lead up to the FOMC statement, but then yet again going into February, building up momentum. And again, the energy is absolutely one to have on the radar as we go into next week. On a weekly basis, this is the strongest close that we've had, of course, over the last 6 months here for oil. So we've closed at $84.83 US dollars per barrel here. We can certainly continue to build up this momentum going into next week. If we do break and close back above the recent swing highs here, then it would set up for a bull flag continuation. And this is where, of course, you could just continue to get that momentum back towards 87 to 90 US dollars per barrel. But there are some massive opportunities to capitalize on energies over this quarter and into the month of February. Some very specific cycles that you want to be capitalizing on with the energies here. As you know, extraordinary times, they do create extraordinary opportunities. Right now, we are living in one of the most exciting and rewarding periods ever in history. Whatever long-term goal you're looking to achieve through your trading, whether that's to create a full-time income, a second or replacement income, or just to earn a better return on your savings, then now is the time to take action to give yourself the gift of a better 2022. Right now, you have an opportunity to make 2022 your best year yet, which based on our research, we predict is going to be a record-setting year due to all of the macroeconomic events that are currently unfolding. If you want to maximize your money-making potential and thrive, not just survive in these fast-moving markets, then you need to adapt your strategy to the current market conditions, and most importantly, utilize a professional research-driven approach. In these times of heightened volatility and rapidly surging inflation, the importance of having an essential income-generating skill like trading, it has become a must-have necessity. If the pandemic has taught us anything, it's that you should never rely on just one income stream. Building multiple streams of income, it's no longer an option. It is a priority to make sure that you're inflation-proof and that you can thrive in this highly lucrative climate, not just survive. If you want to gain the ultimate edge to really supercharge your wealth in these fast-moving and highly profitable markets, you need to trade like the hedge funds, the money managers, the institutions, utilizing a professional research-driven approach. Having access to the right data at the right time, it is the single greatest difference between ordinary and extraordinary results. The greater your data intelligence, the greater your edge in navigating these fast-moving markets with precision, accuracy, and the highest levels of profitability. Trading like every other misguided retail trader out there, using outdated technical analysis or gimmicky technical indicators, it will not work. You're guaranteed to get crushed and chopped up in these markets. This is where you want to be utilizing data, statistics, market intelligence, learn and understand the daily, the weekly, the monthly, the quarterly cycles for each commodity, learn the intermarket correlations, the ratios in the market. Alongside that, key areas of liquidity, capital flows in the market, fundamentals, the macroeconomics, the key drivers which will create those impulse moves, especially major news items which will have a big impact in commodities where you can generate profits extremely fast. And of course, alongside that, you want to learn in real time how the hedge funds, money managers, banks and institutions are positioned in the market. That will help you massively to get an edge. So with that, if you would like to join our community of successful traders, learn the research-driven approach to the market, and join our professional mentorship program, there is an opportunity for you to do so. As a member, you get access to our exclusive live trading room webinars. You get access to real-time trade ideas, access to our institutional research and market intelligence, access to our private members academy website, and also support and one-to-one mentoring. For more information, just go to www.jointhelivetradingroom.com. The link is also below this report in the description, so just click on the link, make an application, and we will of course get in touch with you ASAP. And do make sure you subscribe to our YouTube channel. That way you're always kept updated with all of the latest commodity reports.